This is the Real Estate Investing 365 podcast, your go-to source for real estate investing strategies so you can start living the life you want and get where you want to go. With your host, Justin Hanna.
Hey everybody, welcome back. Another episode of Real Estate Investing 365. Today I got myself Jared Holland here. He's from the Seattle, Washington area. He's a licensed real estate broker. He entered the real estate industry in the construction management field. Now he's transitioned to all kinds of things, flipping, rentals, brokerage. He's just doing pretty much everything. So Jared, what's up, man? Thanks for being here.
Justin, man, I'm really excited. Thank you for having me on the show.
Absolutely. So we caught Jared at a good time. He's just in between all these different signings and closings and all this stuff. So he's like, "Oh, I'll get on the podcast real quick." It's perfect. So why don't we go ahead and dive in, like your background, where you come from. I'm sure you didn't just get born into real estate. So learn about your backstory a little bit, and we'll move forward about your businesses and how you run such successful companies.
Yeah, absolutely, man. Being born into it, not even close. No. So I actually grew up in the San Juan Islands. Like my childhood house had a grass roof. So I wasn't like around big real estate or anything like that. My background's all been in construction my entire adult life. So, I personally always wanted to be a business owner at some point. I just didn't know what I wanted to actually do. From a young age, I just kind of felt like I needed to own some business, right? I got into construction. That was kind of, the family trade. My dad was in construction. His dad was kind of a generational thing. And I was in commercial construction, doing that in my early 20s. And I did it for about 5 years. And I did really well at it, but for me, it was always a means to an end, right? I was like, okay, I'll do this. I'll get a skill. I was making good money and I'll kind of figure out the next steps after that. So when I was kind of transitioning out of commercial construction, I started doing a painting franchise. And so I did something called College Pro Painters. They actually just kind of shut down the business, I think, this year, which is sort of a bummer. It's actually, for the people who really do it and take it seriously, it's a franchise-like model. So it essentially teaches you how to run a business, right? And so that was really important for me. And it taught me how to run a painting company. So my first year running this painting company, I was doing really well because I had a solid background in construction, and to be honest, painting houses isn't rocket science. So, you get the systems in place and kind of rinse and repeat type thing.
Employees, I'm sure, are the hardest part.
100%. And today it's still the same.
Yeah.
Employees are still the difficult part of any business. So, so I'm rocking and rolling and I'm doing really well. And it's my rookie year running this business and it's going great. And I'm painting someone's house on Mercer Island. And for anyone that knows the Seattle area, Mercer Island is it's a very affluent area, right? So most of the houses are $1 million plus and you have, just really, really nice homes. And I was painting these people's house, chatting with this really nice couple. They just did some work on the home. They did the kitchen. They're showing me how beautiful it is. And they tell me the house across the street. They're like, man, this real estate market, it's crazy. This house across the street just sold for like 200 over asking or something crazy like that. And at that moment, I was like, what? I was like, what is this? How much money? Like I'm over here working hard, like really hard to, painting 6 houses a week and just doing crazy amount of work. And at that moment, like I looked at real estate. It's like, you hit this pivotal point in your career and you just literally just turn a little bit. And I immediately just kind of adjust and I started looking at real estate as a whole. And originally I wanted to do commercial real estate because my background was in commercial construction. Like I can get along with those people. I can read prints. I can understand that part of the business. And, I started going down that path and I'm talking to all these people again on Mercer Island. It's funny. I'm running a painting company, right? And I'm going to all of these estimates and I don't even talk about paint. I'm literally talking about, I'm going to get into real estate. I'm going to do this and that. I'm still booking a ton of work though. But people are like, why are you, it's like, that's all I would talk about. You catch that bug. Like I'm sure, probably happened to you and most people. And it's like all you can think about. So immediately I just start, shoveling as much info as I can into myself and just like trying to learn. And I started going down the commercial road and I was going to like do Colliers and, kind of go down that and try to do big warehouses and that sort of thing.
As far as you were going to try to like get into buying them or get into like selling commercial real estate or?
Yeah, just selling it at that point, because like as soon as I heard of it and like thought of real estate as a career, I started talking about it. And of course, I'm working in Mercer Island where these people are very wealthy and they're like, oh, commercial is where it's at. Like, and there was one specific guy I remember, and I think he did commercial real estate, if I remember correctly. And so he was like, you just sell a couple buildings a year and you're set. You just do these bigger deals and then you're good to go. So that's what I was thinking about doing. But then I ended up hearing a radio ad, and, you hear them all the time now for, make money flipping houses with zero money, blah, blah, blah. And I'd heard them several times. And I had like a very close encounter of almost getting into real estate a few years back of like working for a company flipping houses, but it didn't kind of pan out at that time. And so this time it came back around again, and now I'm paying attention to real estate. And like, I think I just finished hearing the radio ad, and my mom calls me, hey, Jared, have you heard these ads on the radio? She's like, I think you'd be really good at this. You should just go to one of these, free events.
Yeah.
Free, what can I lose? So I go, and then, the first one's free always, right? Here you can go for free once.
Right.
The next one I go to, and I end up joining this mentorship program. And it was right after I finished my painting company of my rookie year. I'm riding this crazy high. I have more money than I've ever had at one time. And I just like, you know what? I doubled down on myself. I didn't get a 4-year degree. So I was like, this is my college education, essentially. So sorry, man.
Oh, that's all right. What year was this in? I don't think you mentioned that.
No. So this was the very end of 2013.
2015?
2013.
Oh, 2013.
Yeah.
Okay.
So the very end of 2013, I finished running my painting company at that point. And that's when I ended up, joining this mentorship program. And it was really scary for me. I literally it was 25 grand, and it was all the money I made plus Uncle Sam's money. I'm going to be honest. Like I was like, there's my tax money that I should be paying, but I figured, hey, I've been in construction for a long time. I'll get a flip. I'll be wholesaling. And within a few months, I'll make that money back. No, not so much.
Real quick, what was the mindset behind the fact that, you had this successful painting franchise, and a lot of people would think, okay, I've already made it here. I need to just continue on doing this. Was it really that you just didn't really like the painting, or that you just had bigger aspirations to move on to different things? Like, why did you just stop after 1 year and then say, screw it, I'm going to go all in on this other avenue of real estate?
Yeah. So the painting company, just like the construction, when I was doing that, it was really just like, I never knew what I wanted to do. And I never even realized that I was an entrepreneur until I basically finished my first year doing that painting franchise. And I was at the award show, and I was like presenting, talking about my year. And I was like, holy crap, like I am an entrepreneur. And I look back in my life and I've done all of these entrepreneurial things. And so when I first started the painting company, that was kind of the same idea. Like I just wanted to give this a try and see what happens, and then look for whatever's next after that. Oh, yeah. Okay. Sorry. Cut off for a second there.
No, we're still here. Okay, cool. Yeah. No, that's one thing is like a lot of people, they get stuck in it, but they, like me and a lot of people, you get stuck in like a career or something that you don't really like, but you're like, well, it's paying the good bills and it's doing this and that. So it's, you have to keep the lookout for like what the next step is, and always be looking ahead. Because if you don't, you just get stuck in the rut, and then continue on, you get bigger bills and you're making the money, and then you can't get out of it. So good on you for continuing looking for that next thing. So you sell the painting company, you go on, and you didn't end up making as much money as you thought you're going to make right away, huh?
Zero. No. I mean, I didn't make any money. No, it wasn't not enough money. It was like, I thought it was going to happen really quickly, and I had never looked at real estate before. I didn't know anything about it. So for me, it was drinking from a fire hose. And it took me, I did end up going back and running my painting company one more time. And this time I was like, okay, I'm all in. I kind of had to do it. And I just, I actually ended up going back to commercial construction for about 3 or 4 months. I, left on good terms. I went back to an old boss. I was like, hey, I spent all my money on this mentorship program. Like, I'm broke. Like I need to get things back rolling. And so I do that for a little while, and I'm just so on the fence, because I'm like, do I want to go back and paint again, or just keep pushing forward in my construction when I'm working manual labor and just hope that I'll set myself up? And I decided, I was like, no, the only way that I'll make enough money to be comfortable and just be able to go all in with real estate is just run the painting company one more time. And then, so that's what I did, right? But I kept working forward with real estate. So basically during this time, I'm up late every day. I'm studying, learning as much as I can, and just continuing to absorb as much information on real estate as I can. And then after that year, or the second time I go back and run the painting company, I'm then financially secure after that. That's when I jumped in both feet, went full time, and that's when my business turned into a business, right? I got my real estate license at that point. And then that was really just to learn, or actually I got my real estate license as soon as I joined my mentorship program at the beginning of 2014.
Okay. So yeah, that's kind of a good thing to touch on, is that you originally got that first seminar, or whatever you got, that was like the free seminar, and then you went to a course and you paid 25 grand and all this stuff for it.
Mm-hmm.
A lot of people think that, oh, I'm going to go to this and it's going to be like a magic cure and all of a sudden they're going to teach me everything I need to know. That's not really the case, right? They like went there, they're trying to make money off the event and they want to teach you learn some stuff, but I'm sure they're trying to upsell you and all this stuff.
Absolutely.
But you have to have like the background knowledge and do some research and educating of yourself beforehand. So you came back around the second time, you said, I'm going to learn about this, I'm going to make some money, and I'm going to go at it again.
Yeah. Well, I never really stopped. So after I joined the after I joined the mentorship, I was all in at that point, right? So it just didn't happen as fast as I wanted. I did my first wholesale deal, I think it was like 6 or 8 months in, something along those lines. But it took me that long to just understand kind of what real estate was and like how to get my bearings and everything. And so it was after I was financially kind of secure running my painting franchise the second year, where I had enough money in the bank to just really be able to go 100% all in on real estate. And then I hung my license at that point and became a realtor, but investing was always the end goal. So
Yep.
So I did like 2 or 3 traditional transactions. Yeah. And after that, it was just full on real estate investing and, just pushing forward until
full
I get
steam ahead.
Yeah.
Yeah. So a lot of people have that question, whether they should get the real estate license when they're going into the industry, or if they should just be full-time investor and not worry about it. What's your thoughts on that?
I personally think that it's absolutely worth it. If you're going to do this as a full-time career, you don't necessarily have to list all of your properties or even really list any. But when I originally got my license, the only reason I did it was to actually learn. Like, I wanted to learn the contracts. I wanted to learn the terminology. I wanted to understand real estate as kind of a whole. And then when I ended up going full-time and I hung my license, it doesn't do anything but help. If any very successful, wealthy person will tell you multiple streams of income is the name of the game, and by being able to be a broker and an investor, you can capitalize on almost every deal that comes across your table. Even if you don't want to list them or work with buyers, you can just refer them out and you can get referral fees, and that's another stream of income while you continue to do your investing.
Well, yeah, especially if you're going to go into like the start in like the wholesaling aspect of it. You know what I mean? If you go out and you're like marketing to potential sellers, you go out and you say, hey, I can set you up at this price. Well, if you don't have your license, there's not many more options, right?
Yep.
That if, maybe if the seller doesn't want to sell it 100 grand and it's worth, 180, well, you can say, well, I can actually list it for you if that's what you want me to do. It just might take longer. Or, if you have your contractor's license also, you can say, or I can help you fix up this property. So it gives you like right? Probably exactly what you do.
Exactly.
It gives you multiple different avenues to close the deal. You know what I mean? Instead of just having one thing and then all of a sudden that deal is gone, you're not going to talk to that seller again. So that's awesome. That's cool. So, we touched on your first flip. So why don't we dive into that a little bit? What was your first wholesale deal or your first deal that you ended up getting? What was it? What kind of deal was it? Let's walk through it.
Yeah. So I did some retail transactions, but those are, just working with buyers, right? So that's not that exciting. My first technically investor deal was a wholesale deal that I actually got from a hedge fund. So I met someone who said they had a really great relationship with a really big hedge fund. And essentially we can name our prices, what he said. He was like, literally, we can basically kind of start with like the bottom of the barrel. They'll give us a list of houses and we essentially just analyze the property and just give them a price that we want it at. And he was like, and then they'll basically sell it to us. And I was like, this is too good to be true. I was like, there's no way.
Yeah.
So I do that. They give us 3 properties. I analyze them, make offers on all 3, and they basically counter us on all 3 of them by, I don't know, like 20% or so. It was a substantial amount. I can't remember the exact like percent or number, but it was enough to turn them from being like strong deals to like barely scraping by if somebody had all cash, like hitting like absolute minimal profit for those. And so I was like, okay, fine, whatever, let's still give it a shot. The person I partnered with didn't have any money. They had never done a wholesale deal. They weren't an investor. And I was like brand new. And I put $1,000 down on each property, right? So I'm the one who has the money on the line. And at the time, $1,000 per property was like enough for me to kind of count, And I try to sell all 3 of these properties for a while. I'm not able to sell 2 of them because they're too expensive. They're kind of wonky houses, too many issues. I didn't have the right network, just kind of all of the above, right? And I ended up losing my $1,000 on 2 of those houses, which stinks, right? So it's my first loss in real estate also.
Yeah.
And then the final house that I ended up actually being able to wholesale, it was a pretty decent house, just a rambler, really easy renovation. And I happened to meet someone who actually did have all cash, and the deal did pencil for him. It wasn't a great deal, but at the time, inventory was lower, so we were able to actually get that one sold. And then I ended up having to split the our wholesale fee 3 ways. And I think after my loss on the other 2 houses, I think I only made somewhere around $1,000 on that first deal after like a couple months of a lot of work, like just a ton of work and just banging my head against the wall. And it was, I'm going to be honest, the first deal is usually the hardest though,
Well, you learned a ton, right? I mean, it got you started, it got you in the process. You learned what to say, what not to say, what to do, all that kind of stuff. So
yeah. And kind of what a real deal looks like, and like I networked a bunch, because when you have something to sell and like you're out there really, trying to put a deal together, it gives you more motivation and a reason to talk to people. So if anything, it got me to build a buyer's list. And the lady that I sold it to, I still do deals with today.
Okay, awesome. So you did mention where you got the deal from, but just to reiterate, where did that deal come? Came from a hedge fund, you said, or
Yeah. So and that one's honestly, it's kind of a unique deal, because like I've tried working with some funds in the past. And they typically don't really pan out, and I don't do deals with them anymore because they say one thing and then realistically, like, you can't get those deals at that price. So that one, I met a guy through networking. Again, like, networking is a super powerful way to be able to meet people and, obviously networking, and be able to source deals as well. And so that was actually kind of through a mutual associate that I was working with. But that one it sort of fell in my lap. Other than that, though, I'd been doing like a ton of direct mail in order to actually, source leads. And it was working really well at that time. And that was like early to mid 2014.
Okay. So, and you learned to do the direct mail and these other different ways of networking through the mentorship program that you were a part of?
Yep, exactly.
Okay. But if somebody wasn't part of a mentorship, how can they kind of know, first, where are they going to get the list of properties that they're going to mail to? How do they know what list of properties they're going to mail to? And then what do they say in their letter?
Yeah. So, I will say one thing that I just kind of inherently knew as soon as I got started, just for like most businesses, is that marketing is the lifeblood of any business, right? So if you're not marketing, unless you're really established and like you already have this lead flow coming in, I personally knew that like I had to start marketing right away. And so for anyone that's looking for a deal, like, if you're not marketing in some capacity, whether it's networking, direct mail, knocking doors, website signs, whatever it is, if you're not doing it, you're not going to actually generate any leads. So that was the first thing that I really knew right away. And then in terms of kind of what I targeted and the list and everything. So there's a lot of different ways you can pull a list online. Like a good cheap way is title companies. They're usually like super cheap to pull those, like a couple bucks. And then there are other ways online, like listsource.com is a really good one. That one you can get pretty refined. It's more expensive, but that one's a good option too. And then kind of the types of lists you typically want to target. I'm sure you're very well aware of them, but I'll kind of explain is typically you're going to want a high equity list. And so I don't know, I think you can pull those from title companies. I believe you can. I'm not 100% certain on that.
I think with the title companies, it'll just say like the last time that it was closed on, and then it'll show the different banks if they have first or second mortgages on them a lot of times. So you can kind of tell by the title companies, but it's all in a spreadsheet. So you got to like really look at everything,
Yep. And that's why when you use like some of these online platforms like listsource.com, that one you can be really refined. And that's actually what I used when I started, because I wanted to have as detailed of a list as possible. And so what I originally first started targeting, which is probably like one of the most targeted lists, is high equity, non-owner occupied, right? So that's going to mean the people own the house with a lot of equity in it. So like typically they'll have a very low mortgage amount. I think at that time, or usually I like to shoot for at least like maybe 50 to 60% plus equity in the properties.
Mm-hmm.
And then you want a transfer date typically of like 7+ years. So that means it hasn't been sold in a long time. The people typically have a lot of cash value in the property. And then non-owner occupied, so rentals, right? So with a list like that, if you find someone that's actually motivated or the house happens to be vacant, they'll be able to make a quick decision. They'll be able to sell it really quickly if you come in and you actually make them a good offer, because they don't live in it. They'll have a good amount of money they can actually make on the deal. And then, those are the kind of the two bigger things there.
And then you started direct mailing these lists. Was it just through a company like Open Letter Marketing or Yellow Letter HQ or something like that? What was the company used to send the mailers? Or you could have been handwriting them. Who knows?
Yep, that was the Jared Holland Handwriting Company of 2014.
Sweet, so. You should trademark that. Get you guys trademark it right now.
Yeah, no, dude. It was maybe not every day, but a couple days a week, I would sit down and I would handwrite every single envelope and the return address. I got smarter and I got a stamp for return addresses. Yeah. But, for a long time, I was handwriting all of those. I would print out all the letters. I would sign every letter by hand in like a different color ink so people could really see that it was a lot more personal.
Yeah.
And that was for two reasons. Number one, again, I was like pretty broke at the time. And I really needed to just get marketing out, and I calculated it down to the penny how much I was spending per letter. I think I was around like 76-ish cents per letter or something like that. Calculated the ink, the paper, the everything all the way down to it, the stamps. And to be honest, I was getting amazing response rate. I was getting like 4 to 5% response rate on my letters at that time, which was almost unheard of. And I was sending relatively small batches of letters, like maybe I think I was trying to do about like 50 a week, something like that. And I remember when the phone first started ringing, like I almost jumped out of my chair. I couldn't believe it actually worked.
Well, then you get nervous, right? You're like, oh, shit, what am I going to say?
Yeah, seriously, you do. You get really nervous and you're like, okay, I don't know what to do. That's where having a lead sheet, guys, a lead sheet is very important, because you kind of blank out. And especially if you haven't done this 100 times, you need to have all the right things to ask these people to be able to kind of work through these questions and get the correct information. Otherwise, you got sweaty palms and you're like, you want to sell your house? What, to me? Are you sure? Like,
yeah.
How much can I buy it for? I don't know. You called me,
Yeah.
It's like,
no, that's totally true. And one quick thing about those handwritten letters, I think a lot of people get caught up in like, oh, there's all these easy systems out there. Let me do the easiest thing. Like, oh, I'll go to these companies and just do a postcard, which is fine if you're doing 10,000 mailers a month or something. But I did like a little test thing, and I did the same thing you were doing. I was like I would type the letters and then I would hand sign them, handwrite the addresses, same thing as you, stamp my return address. My response rate was like 10 times better than it is on like a postcard that I'll mail out. It was like ridiculous. Like out of 100, I'd get like 6-7 calls back on those 100 letters. So
great. That's like 6 to 7%. And that's astronomical.
Yeah. And I mean, and out of that test, cause I was kind of testing for some stuff we got going in Boise area, but out of that test, it's like I didn't close on any, but I had got these contacts of these people that they're just calling me for nothing, like easy.
Yep.
And it was just like easy money. So,
Calls
or
a call,
easy
man.
process, so.
Yep. Put them in the CRM and then keep following up with them.
Yeah. Cool. Okay. So you got this, you got your list, you got your letters, you found these deals from the hedge fund and everything. You ended up closing on this deal. You didn't make that much money.
Mm-hmm.
One thing I wanted to ask though was a buyer's list. You know what I mean? Because a lot of people, they get to this point and they go, okay, I got to go out there and I get people calling me. Now what do I do? Because what if I can't close on it in the 30 days? And how do I find buyers for this property?
Yep. So, getting into this business, there's a lot of moving parts. Being especially a one-man show, like most people are when you get started, you're wearing every single hat. So you not only need to be marketing to find the property and then trying to negotiate with sellers and analyzing deals and all of that, you also have to be building that buyer's list. And so, during this time, networking is how you're going to build that buyer's list. And, going out to whatever networking events there are, if there aren't that many in your area, doing a search online, right? So if you're in Boise, Idaho, like you said, Google in Boise, Idaho, cash home buyers, and just kind of any variation of that word, home buyers in, Boise, sell my home quickly in Boise, any of those things that someone who were selling their house would do, like how do I stop foreclosure, those kind of things. Then you're going to find all those people, and then you just start cold calling them and say, hey, my name's Jared. I'm in the process of putting together like a really big marketing campaign, and I'm looking for a couple really strong cash buyers that are looking to buy, 4 or 5 houses this year, and again, having a lead sheet, right? Because when you're new, like you just don't know the questions to ask. So if you have all of this stuff in front of you, fill out their information, get all of their info, their phone number, their email, their buying criteria, how they finance their properties, how quickly they can close, all of the important things that essentially you're going to be telling a seller that you're going to be doing to make sure that you have these people to be able to close on the deals. And so what I did a lot was networking. I really enjoyed it, man. I'd pound an energy drink. I'd go out to these events and I would just go around and one thing you got to be really careful of is getting stuck talking to someone that you don't have any business talking to.
Yeah.
You're talking about their dog Fluffy and how he has bad diarrhea and he pooped on the carpet. You know what I mean? Like, I'm at a real estate event. Why am I talking about your dog Fluffy right now?
Right. Yeah.
So having like kind of a good quick intro and, kind of escape route also is super important. And, telling people, hey, it's really great to meet you, Justin. I have a few more people I need to meet out here. I'd love to grab your information and we can chat later. I'll give you a call later this week. And having just a quick exit strategy like that is how you're going to be able to meet a lot of people and be able to collect cards. And then the most important thing, obviously, is just like with leads, to actually follow up.
Yeah.
Right? Give them a call after you meet them and actually build that relationship. And then you actually will be able to start building a real legitimate buyer's list and a network of people you can work with.
Right. Because if you're meeting, so a couple of things on the meeting people at events or whatever, if you're meeting people in an event and you just say, hey, what's up? My name's Justin. My name's Jared, whatever, get the card real quick. Hey, nice to meet you. I'm going to reach back out to you later. If you don't reach back out to them like relatively quickly, they forget all about you. If they don't know anything, they like, who is this guy? But if you all of a sudden, like a week later, hey, so-and-so, this is Justin and I met you at the event, I just want to touch base. That all of a sudden puts you at the 100 people up on their list, way up, because they're like, wow, this guy actually called. He actually remembered my name, whatever. So that's a good point. And then another thing that I think when you go to these meetups is don't be overbearing, right? Wouldn't you agree? To where you're kind of going in there like the new guy, like you're all excited and all this stuff. Hey, anything you can do, like be over aggressive. Because then people are like, man, this guy's kind of weird. You know what I mean? Like still try to keep you cool, but be helpful or assertive, but don't be overly like, I don't know, cheesy about the whole situation, Wouldn't you agree?
Yeah, it's a fine line. It's definitely a fine line. You don't want to be a used car salesman. You know what I mean? And you can tell when someone's new, right? Mm-hmm. And so don't try and mask that and say, I'm going to do 100 deals this year, because when you're having a conversation with like a seasoned investor, there's things that you say that kind of give you away as being a newbie, So like being upfront with people, you don't have to say, hey, I just got in yesterday. Hey, I'm relatively new in this industry and I'm really pushing hard. I'm doing this full time, or, I'm working on building a really solid network of people to do deals with. However you need to phrase it, to maybe not say outright, I'm brand new, but at least, hey, I'm relatively new in this industry, but I really am looking for some, experienced people to work with. And then again, the follow-up is really important. And something else that I found was helpful is having some way to kind of stand out, because if someone does go and network a lot, they do meet a lot of people. And so one thing I did when I first got started is I had small cards, like moo.com, for instance, is a great place to buy cool business cards.
Moo, like MOO?
Yeah, moo.com. That's currently where I still buy my cards. I don't buy the same ones I used to because they're a little bit silly and you can't get much info on them. But they were really cool cards. I still have some. They're about 1 inch tall by 3 or 4 inches wide. And they're just like little sticks of gum, basically. And I had my company on there and my info on the back. And some people would even remember me as the little card guy. I don't care. I'll be the little card guy. You remember the little card guy.
Yeah.
Anything to be remembered by and some way to stand out, I think is really important, because that's just one extra way. Like when I would follow up with people, they may not have remembered the conversation we had 100%, but once they clicked, or I would tell them I gave you the cool business card, then they would remember, and then they could see my face again, and things kind of, come back full circle.
Cool. No, that's all great tips. And I like that little card, little trick or something to remember you by. So that's awesome. Well, so you get these first couple deals, and we could go down a rabbit hole about all this stuff, because there's a lot to intricacies about it. But again, I don't think podcast is a place to learn really in depth about it, but to get your wheels turning. You do tons of other stuff. So you kind of go from wholesaling, you start getting more and more deals, right? And then you move into more of the flipping and rehabbing part of your business. Is that correct? Uh-oh, what happened? Can you see me? Okay, so you moved from kind of the wholesaling business, and I'm sure you did more and more deals, you got more proficient in that, and then you kind of, at some point, you realized, hey, why don't I, since I have a construction background, why don't I start doing some rehabs and flips on these properties, and maybe broaden my spread on the profit that I'm making? Is that kind of what happened?
Yeah, kind of. So my end game was always flips, honestly.
Okay.
I never got into it to try to do the wholesaling. Because of my background, I was coming in to do flips. And so I think I only did maybe 5 or 6 wholesale deals, I think. And then one of the first flips I did was actually 100% seller financing flip. And then I partnered with some people on it that financed the renovation costs as well. And that was a pretty easy flip in terms of all of my projects. It was a deal that we literally just needed paint. What do we do? Paint, appliances. I think we did hardware throughout the house. I had a roof to patch, and it was a $24,000 renovation, which again is pretty light.
Yeah.
And that was one that I partnered with for the first time, because it's still intimidating. You get into these deals, it's kind of you on the hook and, borrowing this money, or if it's your own money, it's pretty stressful.
Mm-hmm.
So that was my first one that I did. And it was pretty easy in terms of flips go. And then after that, once you kind of get one under your belt, just like wholesaling, you kind of realize I can do this. This is a real thing.
Yeah.
And then after that, I was gung ho. I was like, okay, I can do this. Let's just go full steam ahead. I happened to meet another investor who'd gone through the same mentorship program as me. And so when I ended up finding my next deal, and my first, I think at least 2 deals for sure, maybe my first 3 deals, I can't remember the third deal right now.
Yeah.
I know for certain, because I didn't have any money or enough money to buy these houses, and I was targeting non-owner occupied, high equity homes. I would meet these sellers, and like we were talking about earlier, which you're a smart man, always give multiple options, right? 3 options is what I always give people. And so cash option is always one, which is always going to be the lowest. And then I would give an option of listing the property, which is always going to be, the net will usually equal somewhere close to the cash option, maybe a hair more, but obviously you have to list it and put money into it. And then the third option I always like to give, if it's possible for a rental, is a partnership. And so I'd call it a joint venture. And I like to call them free houses, because I would negotiate a deal with the sellers to give me the possession of the property. The very first one I did, I didn't even give them any earnest money or anything like that. the next one, I kind of figured out how to structure it more correct. And then this guy I ended up meeting, structured a deal to partner with him. I learned a better way to actually structure the deal. I ended up partnering with another investor that I knew who actually had funds to finance the renovation. And basically I negotiated to give him, I think, $5,000 up front, which would be credited towards his purchase price. We negotiated a set price that he got. So let's just say round numbers, I think it was somewhere around like something like 275 or 300 or something like that was for this property. And then basically by him waiting for me to renovate the property, he made, I think, an extra like maybe $25,000, right? Because I didn't have to use hard money. We didn't actually have to come up with the acquisition funds. All we had to come up with was the funds to renovate the home. And so I negotiate with the seller, and then I tell him we're going to secure this with a deed of trust, our funds, because we have to secure our money somehow. We also have a joint venture agreement that's been drafted. And so I sit down with him and we go through everything. It's all good. And then when it comes time to put the deed of trust on the property, we go to Bank of America because we both have bank accounts there. And I have a deed of trust, and we go sit down there and we start filling it out. And then as we're there, it finally clicks that a deed of trust is a lien. And he's like, "You're going to put a lien on my property?" And I was like, yeah, that's how we secure our money. I was like, I think it was for like $75,000, which was the renovation budget. But it was so funny because like, I don't think it ever clicked with him until we got there and we were actually doing it. And he was like, "What do you mean you're going to put a lien?" And I was like, "Yeah, that's how we have to secure our money." He was okay with it, but he just, it just never resonated with him, which was pretty funny.
That is funny. So let's break this down a little bit more, because I feel like people might have a hard time following exactly what happened. So you kind of, for this specific property, let's say you found the property again by direct mail.
Yep.
And you found somebody that wanted to potentially sell their house, and you gave them 3 options.
Yep.
And the third option was, hey, why don't we partner on it and turn this into a rental property, and then we'll both own 50-50 of the deal?
No, not quite. So we sold it. So the partnership is essentially, it's a seller financing deal is what it is. So I structure them as like joint venture deals. Like the documents that I have say joint venture deal or joint venture on it. And basically the way the document is written is Mr. Seller's duty is to essentially turn the property over to me. And we agree that when the property sells in X amount of time, I typically write them depending on the extent of the renovation. I've done renovation of almost 300,000 with a partnership. That one, we had a much longer deal. It was like, I think 9 or 10 months was the total length of when it would, at worst case scenario, close. This one I think was within 6 months. So within 6 months, Mr. Seller agrees to get paid, whatever said, $350,000. After the work is completed, his duty is to basically give me the possession of the home and just wait. Like that's, in a nutshell, you give me possession of the home and you wait until I'm done. My job is to finance the renovation, which will be secured on the property with a second lien or deed of trust. Deed of trust sounds much nicer than a lien.
Yeah.
And then I will finance it. I will manage it. I will design. And then I will also sell the house because I'm a broker. So by me doing all of those things and him waiting for us to sell, I'm able to pay him an extra, 25,000, which is essentially my hard money cost. So for me, my profit is about the same. I win because I don't actually have to get a hard money loan. I don't have to make hard money payments, which stink. And then it's a win for him because he just has to wait a couple months because the property is just sitting there anyway. It's not costing him anything. I cover the mortgage payments, so it doesn't cost him anything at all. And he just waits, and he basically is making, $4,000 or $5,000 a month extra, and he just has to wait. So if you look at his an extra $5,000 a month, that sounds pretty nice.
Yeah. So he's making the extra $5,000 a month because that's the extra profit he's going to get by waiting. So
100%.
Essentially, simply, let's say the seller wants 100,000 for the prop, or you offer him 100,000. He says, no, I don't want more. You're like, okay, well, if I fix this property up, we could sell it for, simple numbers, 200,000. And if you agree to take 150 for it, we'll split the profit in between the extra money. God damn it.
Okay.
So to put this in simple numbers, let's say you find a property, you offer the property the seller $100,000 to buy the house. He says no, and you say, well, our third option would be, I do the renovation cost. I secure our stuff by a deed of trust,
Yep.
and whatever I can sell the property for X amount, let's say 200,000, we'll split the profit in between, kind of thing.
No profit sharing.
Oh, no profit sharing.
I work hard for that.
Okay. So I guess you just guarantee him amount higher. So if it's 100,000, he says no. You say, how about this? I'll guarantee you 150,000, and then whatever you sell it for above that 150, you get the profit.
Correct. Yep. Because honestly, I didn't really like the profit sharing idea because first of all, I'm still paying above market value for their house. You know what I mean? So I am giving them more. So they're making essentially their additional profit by doing this deal with me. And then the other thing, when I actually have brought it up a couple of times, what if we lose money, right? What if it's less profit than we expect? And I give you the cash price, and then we're supposed to split profits. And I've had that conversation with the seller, and they're like, oh, no, I'll just take the higher price.
Oh, right.
Their risk tolerance is a lot lower than an investor's risk tolerance.
Right.
So typically they're not as interested in doing profit sharing. They like a guaranteed amount.
Okay. No, that totally makes sense. Cool.
Yep.
Okay. So when you're coming into houses, I'm sure it's different now because you're more proficient in doing the flips and the rehabs and everything. But how do you go about the reno costs, right? How do you go and look at a house and say, oh, I know this, the kitchen's going to be this and all the different things. I'm sure you have a spreadsheet and stuff, but how do you go about estimating that?
Figuring those out. Yeah. So I will say I got really lucky because my transition into real estate investing went like kind of perfectly, from boots on the ground to then estimating painting houses. So I'm practicing estimating, hundreds of houses, and then it goes to estimating actual full renovations of houses. Yeah. So you 100% have a spreadsheet, right? You definitely do. And the mentorship program I joined gives you like a template, and I'm sure you can look online, or Bigger Pockets might have one available, or if you ask enough investors, like they'll probably give you one, or at least an outline. And basically it goes from, just think of it like the roof all the way down, right? So you have the roof that costs X amount, then you have windows, siding, and typically you want to bid things kind of per linear foot or per square foot. If you just kind of do it as like one big group number, it can get a little bit dicey. Like when I first started, I would just bid like a bathroom for like $5,500, and that should hold plumbing and tile and everything else in between. And that worked okay for a little while. But once construction costs start to go up, or whether that's materials or labor change, then all your numbers get skewed and you just start going over budget in all areas. So honestly, the first several are going to be the hardest. And so what I would say, when you are estimating construction costs and you're brand new, have your contractor bid everything out and do all of your design at the very beginning. It may take you longer, and I know everyone's just super excited to just literally jump right into it and just go straight to work. But that's how you can get in a lot of trouble. If you have all of the materials picked out ahead of time, and the tiles, $2 a square foot for the bathroom floor tile, the backsplash is $12 a square foot, flooring is, $4, whatever it is, you have all of these prices ahead of time, and you sit down with an experienced contractor, then you guys can work together, and you'll be able to put together a full scope of work for the project. And until you've done enough deals in your market, because my costs here are completely different costs than Dallas, Texas, or New York, or Florida, or, anywhere else, or Idaho. All of our costs are going to be very different.
Right.
The material costs might be close. They'll still be different, but the labor is the biggest variable between all of those. And so, again, working with the contractor when you get started, and then doing it, section by section. So doing the roof, and then doing like the windows, if you have to do siding repair, the flooring per room, right? So the flooring in the living room may be hardwoods, the bedrooms are probably all carpet, the bathrooms will be tile, and breaking it down kind of per, section of the house, instead of doing kind of one big bid. If a contractor says no, then he's not your contractor.
Right.
So if he won't do it line by line, then get someone else, because I won't accept just one big bid from a contractor. If I ask them to bid a house and they say labor is going to be $30,000, and that's all they'll give me. I'm just, no, like I need to know per item, how much you can charge me for tile, what are you going to charge me for floor installation, for the window installation, because that gives you the ability to bid houses moving forward a lot faster. Because if you don't know what your construction costs are going to be on a house, yeah, man, you're flying blind, and that is a very dangerous game. That's not investing, that's Russian roulette.
Yeah. So so what you're saying is the more of these you do, you want all those data points. So then you keep track of those in a spreadsheet or something, or whatever your tracking system is. And then you can see, okay, for the last 10 houses, my bathrooms cost me this much per square foot, my tile in the kitchen's this much, all the different things cost me this much. So you have a better idea. So the more you do it, the quicker and quicker you get.
Yeah. And I would say the labor doing that kind of thing is going to be important, because your job materials will change a lot, right? So unless you're just doing really entry level homes and you're in an area that you can just do the same house over and over, which sounds terribly boring.
Yeah.
You're going to have different materials. So, but the materials are easier to estimate because you know how much those are per square foot. And so at this point, I continuously update my spreadsheet after, maybe not after every project, but I look back after several and I'm like, okay, well, what's changed over these? Like, why did this cost more? I'll give you a perfect example. So when I got my original spreadsheet with all of these construction costs, they had a furnace swap, just the furnace itself, right? A gas furnace was like $2,500. I don't know if that sounds reasonable to you or not, but here it's an absolute minimum of like $4,500 for a good high efficiency furnace. I rode with $2,500 for my first a bunch of flips, and then I was like, why am I over budget here every single time? And then I actually paid attention. Oh, the furnaces are never that cheap, unless you buy, I don't know, one that fell off the back of a truck, maybe.
Yeah.
You
Get the
know?
local handyman to put it in.
Yeah.
Unlicensed.
So just paying attention to all those, costs that are the recurring costs, and then just continuing to update those as you continue to do more projects.
Okay, right on. Yeah, I totally understand. So what about the design aspect of it? So how do you go into a house and really decide what the design is going to be and
Mm-hmm.
go about, because you mentioned do that first, right? Have the design idea ready before you you move on to the bidding of the job. How do you figure the design out?
Yeah, and so that one, it can go both ways. So it really, more than anything else, it's playing on the area that you're working in. So if I'm doing a flip in a portion of West Seattle that's mostly more first-time home buyers, or it's kind of lower to mid price points, I'm not going to go above and beyond and try to add these really luxurious things like a huge walk-in pantry, or like put really high-end appliances in there, or add something that's above and beyond. It's looking at your comps more than anything else, and then figuring out what's going to fit in that neighborhood. If you're in a first-time home buyer neighborhood, you need to make sure that you renovate the house and you don't over renovate it, because I actually really enjoy designing the houses, and I love seeing the finished product, and I want to make it as fancy and beautiful and cool as possible.
Yeah.
But if you do that in a $300,000 house and you put $12,000 appliances in there, you're not getting that return. That money is not coming back to you.
Yeah, no, definitely. That's
Yeah.
another reason why being an agent like you are is totally beneficial, right? Because you can get on the MLS for one, you can do all your comps, but you can also go in the neighborhood and get into all the other houses as you're learning the areas, right? You can get in there and kind of see what's going on if you're new to the area, right?
Yeah, absolutely. And so just knowing the comps is really, really, really important. So when you're flipping a house in a neighborhood, even looking a year back, you can see what sells quickly, what kind of features people like or will pay for in that area. Because in any city, if you kind of, draw maybe a couple mile, radius, and you hit little different suburbs within the city, people have slightly different styles. If you go into North Seattle, or you go into Ballard, you have a little bit more kind of eclectic style and a little bit, more unique stuff than if you go maybe over into Ravenna area, which is like a more established neighborhood. You're going to have a little bit more traditional style, which will be a little bit, kind of more low key, not maybe as loud of, materials used. And then you go into maybe another area and it'll be really modern.
Yeah.
Right. So if you build a super modern house in a neighborhood that's like all colonial style homes and traditional and craftsman, and you build like this big box, it might be beautiful, but it's
It
going
ain't
to
gonna
stick out.
sell.
No, it's going to stick out like a sore thumb, and everyone's going to hate you for destroying the block.
Yeah.
Like you want the neighbors to love you, not hate you. So like knowing your audience and knowing the neighborhood is how you can really decide kind of what you want to do in that area. And that's one thing that I really enjoy too, is like I take a look at a house, and if it's like an old craftsman, then I want to keep that craftsman charm. Like I do as much as I can to keep that style and look in the house. And if it's, again, just kind of, again, playing to the neighborhood, I think is more than anything else how you kind of decide really what you can do with the homes.
For sure. No, it's a ton of good advice. So before we kind of move on to like the last section, I want to touch on, financing, how all the financing of the deals. So if you move, you mentioned that you brought in a partner investor, I believe, on this house we were talking about. But what are some other ways people can finance these deals? If they're going to do the flip, if they're not going to, do a joint venture with the owner, how can they get money to do all this work?
Yeah. So I think that the first question is going to be, in what capacity do they want to kind of start investing? Like, are they going to start doing this as like a hobby? Are they going to do one a year? Is that their goal, is to just do one a year and do it as like a project of love, and I just happen to make 50 grand on it too? Or do they want to try to grow this and do volume? Because if you do this as like a pet project and you just literally want to do one a year and you want to take your time and maybe do it yourself, an owner operator, then get a conventional loan. You know what I mean? Get a conventional loan, because it's going to be way cheaper. You could do like a 30-year loan or like a shorter term loan with a, lower interest rate, and plan on selling it sooner, because that'll save you a ton of money. And then you can finance, the renovation either out of pocket, or their loans called 203K loans, which are renovation loans. And that's something like an end user, a normal person would do, right? You find a house that you want to fix up. It's going to be a much longer process, and you're not going to be very competitive in the market to buy the house, because it's a traditional loan, and it fits in their little box, right?
Right.
But if you want to be an investor and you want to do any kind of volume and actually do this repeatedly, then you have to finance creative ways, whether it's doing a seller financing deal, which again is my favorite because they're free, or doing a hard money loan, which is how I finance 90% of my deals now. And a hard money loan is an equity-based loan. It's essentially a private loan that a fund runs, and it's essentially a cash deal that someone does, and they underwrite the house by the value of the property, not 100% of the actual individual. And the benefit of going that route is they're not going to pull your credit. It's not going to be the full underwriting process on that. The lender will look at the deal instead of the person as much. The person matters. You can't have no money in the bank. You can't have a 450 credit score. You can't, you know what I mean? Like, you have to prove that you can afford to do this and have enough, capital available to, first of all, buy the house and then be able to carry the mortgages as well. So hard money loan, and those are usually, depending on the area, anywhere from the lowest now I see, I get letters in the mail as low as like 6.99% to typically like up to like maybe 15% annualized interest. And then they're usually going to be, anywhere from half a point to, I've seen up to almost 4 points. And for people that don't understand what that means, is the annualized interest is the interest rate on the total loan. So if it's $100,000 loan on a house, let's just put it at 10% annualized interest. That's 10 grand a year. So your mortgage payments, you break that up over 12 months. Not that quick. Let's say it's 12%, then it's $1,000 a month.
Yeah.
And then if you're paying, if you're paying points on it, which is really what hurt the most, if it's, 4 points on 100,000 or 3 points, that's going to be $3,000 up front that you pay that company. And that's how they make their money on the deal. And then those loans are usually only going to be the shortest terms I've seen are like 6 months to, ideally you want a year. Ideally you're going to want a year term, because especially if you're new, like you never know what's going to happen. And it's way better to have more time than less time. And by doing it this way, you're able to scale quickly and you can close a lot faster, right? Most of the time when I buy houses, I make offers closing in, 10 business days or less. I've closed in as quickly as, 4 or 5. Now 5 days is probably the fastest I've closed with a hard money lender. And then, so that's for the acquisition of the houses. And then I partner with other investors now. Being able to leverage other people's money is the best way to be able to scale. Keep in mind, when you leverage other people's money, it's still their money. So you got to treat it like it's your money,
Yeah.
right? So you use other people's money and then you give them returns on their investments as well.
Yeah, for sure. No, that's tons of great advice. Yeah, and people listening out there, there's tons of different ways to finance your deals. You know what I mean? There's all the stuff you talked about. I mean, home equity lines of credit if you own your house.
Yep.
You can do refinance, cash out refinances. You can get personal lines of credit at banks if you qualify for it. And I mean, if you have to, I've used my credit cards. You know what I mean? I'll get those 0% offers in the mail, and it might only be 20 or 30 grand, but that it can at least get you renovation costs or something. Just don't get caught up in paying 25% interest over and over again on them credit cards.
Yeah.
But when you get out there and into it, you know, there's tons of different ways for you to move forward. So that's awesome. Great advice. So kind of where are you headed next? You know what I mean? You got all this stuff going on. Are you preparing for maybe, who knows? Everybody talks about this economy, where it's at, you know, is it a bubble? It's not, especially being in Washington, Seattle area on the coast. How are you preparing for that? And what's your plans for the future?
Yeah. So right now the Seattle market's actually doing a whole lot better. I just listed a house a couple weeks ago, shortly after the new year, and I put it for like I think it was 949, no, 929, something like that. And I ended up selling it in just a few days, and we sold it 40,000 over asking, got multiple offers. So I have a couple other houses coming up, which is great. And I've read a lot about expecting this year in Seattle at least to be similar to kind of like a 2017 year. Low inventory right now, and there's a lot of buyers out looking, and I'm really seeing that too. I am working with a buyer right now, and we've been out looking, and there's a lot of competition. So for a seller, that's fantastic, right? So that's really, really good. When there's low inventory for me, that means that's when I can actually make the most money, because as long as I put up a product that's really good, then it's great for me. So in the short term for me, honestly, I'm in like 100% full blown buying mode. Like I'm trying to buy as many houses as I can. Like right now, like I'm buying one tomorrow, and I bought one 2 days ago, and I'm still looking for 3 more to buy.
Dang.
So like, I'm aggressively looking to buy as many houses as I can to come into spring with a lot of inventory. So, you know, this next year is actually, it's going to be my biggest year to date for sure, which is kind of good timing for me. I started new construction this year. I'm building 6 townhouses that are going to be finished in hopefully somewhere around May. And then I just started work on a 4,000 square foot single family house out in Magnolia, which is a really nice neighborhood of Seattle. That one's supposed to be finished somewhere around May as well. And so this year in the short term, I'm trying to push and basically get as much sold by about end of Q3. And then at that point, I'm going to kind of scale back, and I'll probably not buy as much as I can, because coming into an election year, you never really know what's going to happen. Things kind of slow down a little bit. And then, you know, my long-term, like this is all I'm going to do full time. So like, as my business grows and adapts, I'm going to continue to kind of have new construction as one, you know, portion of my business. And then I'll continue doing flipping. And then I'm going to start moving more into like commercial stuff. I want to eventually, I definitely 100% want to build apartment buildings and some sort of much bigger scale developments. And I want to start getting into buy and holds for that stuff too. That's a little while down the road, I think, but you know, you never know, right? You never know.
You're doing a lot. So maybe next week you can buy a 500 unit complex. Come on, dude. Let's do it.
Fingers crossed.
Yeah.
That'd be nice.
Awesome. Well, our last little part of the show here is, what was your favorite resource when you were learning about real estate and you knew nothing about it? What was your favorite way to learn? Was it podcasts, mentorships, seminars, books? What did you like the best?
Yeah, honestly, for me, I would say podcasts and books on tape, like without a doubt, because when I was either running my painting company or when I had to go back and work in construction for, you know, those few months, I had a headphone in my ear all day long. I'm talking, I was so hungry for knowledge that I wanted to learn everything that I could, that I was always listening to either books on tape about kind of entrepreneurship or some kind of sales books, or listening to podcasts. Especially, there was one I listened to, it was by Todd Toback. I think it was No Limits Real Estate Investing. And that was one that I listened to, one of the first ones I listened to really early on. And, he got excited about the business, and you get to hear about these people doing deals. And until you actually do a deal, I've said it already this time, like, you don't even know it's real,
Yeah.
like you're chasing this mythical business, right? And when it finally actually happens, that's when it really clicks. And so until I actually started getting any deals done and really being in the industry, I was listening to podcasts, like as many as I could all day long, and books on tape if I wasn't doing podcasts. And then obviously I did the mentorship. And that was just it gave me the blueprint, right? It showed me what I needed to do. So those two things are free or very, very cheap. And I think that is seriously the best way. I have an email that I've drafted for like a few friends, and I call it Real Estate Investing 101. And I basically just kind of outline a handful of items and books that I've read and podcasts that I listened to that just gave me a lot of knowledge, just talking, like we're talking now, hearing investors doing deals, it gets you motivated and it makes you want to get off your butt and actually like, I'm gonna go knock some doors down, man. I want to make 50 grand, I'm going to find that deal. It's out there.
Yeah.
And that's what really, really kind of kept the fire lit under me until I actually started doing deals. And then when you start doing deals, it gets more and more exciting.
Yeah. Heck yeah. Okay. That's a lot of good information. Maybe if you can find that old email, if you find it, send it my way and I'll add it to the show notes.
All right. I will.
And then we have another question that we talked about, a favorite app or a piece of technology, but you said, man, there's so much out there. But how about this? What is the CRM that you use to track customers for your wholesale and flipping deals?
Yeah. So I've used a few different ones, and for me, it's been a little bit tricky because when I switched brokerages a little while ago. And so at that point I switched CRMs to what they were using. Mm-hmm. So one I actually really did like to use for a long time was one called Contactually. I liked it. It was pretty straightforward. It was easy to input all the people's information. And, you can set follow-up emails. You can actually track when people open emails. So that has probably been the favorite one that I've used. And when I was like just in sales mode, which is, to be honest, when you're doing this, like you're a salesman, Yeah. And when I was just doing that one I actually really enjoyed to use. Recently, as I switched over to a new brokerage not too long ago, it's been about a year at this point, actually. And now I switched to a different CRM. So I just switched over to Podio. A ton of people, I'm sure you've probably heard of Podio, right?
That's what we use up in Idaho.
Yeah, exactly. Podio's, it's for this business, and it works really well. And so I switched over to that one, and we're still at the point getting kind of everything uploaded and kind of making it happen. But, what I'll say more than anything else, though, with a CRM is whatever it is, just actually use it. Mm-hmm. You know what I mean? If you're at the point, my first CRM was a file of papers. I had all my leads. Yeah. And when it was time to do follow-up, I sat down with my folder full of papers and I called every person. I made a note, flipped it over, and went to the next one.
Yeah. So it doesn't really matter. You don't have to have all these fancy things. It's just the follow-up is key. Like, do the follow-up.
Absolutely. 100%. Yeah.
Cool. All right. Last question, mindset tip. If, sometimes people get down and they get kind of unmotivated. Is there anything you do specifically to kind of keep you on the right track for moving forward in your business?
Yeah. I know it's something you say, like healthy body, healthy mind, right? I know I've seen that somewhere. And so that's something that it does help. Like when I go out and I work out, sometimes it really does help me kind of get back into that mentality, whether I listen to music that I like or I listen to a podcast that gets me motivated. That's something that really does help. But I would say, I'm sure people hear this a lot or say it a lot, but like, when you get started in any business or anything that's going to be a lot of work or it's a long haul, you got to figure out what gets you out of bed in the morning and like a burning desire, something that just pushes you and makes you want to work hard. Like for me, it was like creating a legacy. Like I told you, I grew up in a house with a grass roof. Okay. Like my goal is to completely like change the lineage kind of my family. I want to just break the mold and really change the way things are going. And so for a long time, and it still is, that's something that really helps motivate me and like really helps me keep pushing forward. And each day that goes by, I can kind of see, working in the right direction. So finding something that really is that really kind of burning why you want to do this and why you want to maybe make all this money or accumulate rentals or create wealth outside of just, obviously money is great, but something that's going to really push you. If you can figure that out, then it's going to help you a lot. Something else, one other thing on that,
Yeah.
that helped me too, though, is like, I can't remember what book it was that I listened to, but it was one of the ones. I was some kind of, I don't remember. So whatever book it was saying like, saying affirmations. For a long time when I first got started and I hadn't got any deals done, or I was just getting deals done and it was still really difficult and kind of down, I would just tell myself, I am an investor. Like, this is like, I am an investor. This is what I do. Just get kind of a little mantra that you want to say. You say it enough times and you believe it enough times, it will happen.
Awesome. Yeah, no, totally agree with what you're saying there. Where can people find out more about you or contact you if they want to get in touch?
Yeah, so you can definitely find me on Instagram. So Jared Flip Seattle is my Instagram page. I'm really trying hard there to give people a lot more good content also, kind of doing before video walkthroughs of homes and after them. Other than that, I have JH1 Homes, my Facebook page, and then jaredbuyshouses.com. You can find me there, or literally just Google Jared Holland Seattle. You can find me pretty easy.
I feel like that Jared Buys Homes, or your Instagram handle, is an HGTV show ready to go.
Oh man, it's coming. Just wait for it.
Affirmations.
Yeah, affirmations. Jared flips Seattle. It's going to happen. Okay.
Jared flips Seattle. Cool. Well, Jared, I appreciate you being here. There's a ton of good knowledge. I learned a lot. Hopefully the listeners did too. Everybody, please reach out to Jared or check out his stuff. Follow him on Instagram. And Jared, man, thanks again. Thanks for being here. And I'll talk to you soon.
Absolutely, Justin. Thank you so much.
Thanks.